Aloha, this is Suze, and I'm continuing my series of YouTube videos on VA home loans. The first three videos were on the myths of a VA home loan. The fourth was just the basics on just getting a general understanding if you qualify for a VA home loan. And now this fifth video is going to be on the basic understanding of entitlement and loan limits. If you haven't had a chance to watch the first four videos, I do highly recommend them. They're easy to understand, they're not long, and maybe you know someone who is trying to understand the benefits of a VA home loan and how they work. So if you want to share these series of videos with them, I highly recommend that as well, because they're really simple to understanding, and hopefully it'll get you on the path to be able to buy a home using your VA entitlement. So continuing on understanding your entitlement, as of January 2020, the Veteran Administration no longer has loan limits in their guidelines. So effectively, if you have your full entitlement available, you can come in with a 0% down. So in essence, the Veteran Administration or a VA loan does not make the down payment for you. They do not make the loan, but they do guarantee and reassure us as the lender against any risk when you are putting 0% down. So even though VA no longer has loan limits, if you have previously used your VA entitlement on a loan and it has not been fully restored by either refinancing it to a traditional mortgage or selling the home and paying off the VA mortgage, then you will have a county loan limit that is applied to you. The VA will only guarantee the total outstanding loan amount up to the county loan limit. Any difference would have to come from you in the form of a down payment. And we will go into that into the next slide. And now, because you are a first-time home buyer and you have never used your VA entitlement, the county loan limit does not apply to you. So you can come in with 0% down. So let's go through this example. Say you're thinking of buying a home in Fort Campbell in Clarksville, Tennessee. That would be Montgomery County. The loan limit in Montgomery County is $726,200, which no big deal, doesn't apply to you. Say I qualify you for a loan or a purchase price up to $600,000. But you want to be more conservative. You don't wish to have a mortgage payment that high, don't need to have that much house. You decide to go with maybe $300,000. Well, with that loan amount, we're going to add the first time use of the VA funding fee of 2.15% to that loan amount of $300,000. So that is financed, and you're going to come in with 0% down. The VA administration is going to guarantee 25% of that based on $300,000. That is a $75,000 guarantee. That reassures us as the lender to allow you to come in with 0% down. And the next slide, I'm going to go into subsequent use. Say you have already used part of your VA entitlement before, what happens next? So moving forward with second tier entitlement, as we like to call it, because you've already used your VA entitlement before, so now we're going to tap into if there's any extra entitlement left over for you. So after buying your first home, let's say you now have PCS orders to move to Fort Hood, Texas. You'd like to keep your home that you own in Clarksville, Tennessee as a rental property and buy another home in Killeen, Texas. Because you are using a VA loan for the second time and already own another home using your VA entitlement, you are now subject to the county loan limits to determine how much you can borrow to purchase a new home. So moving on with your second tier entitlement, you've got your orders to move to Killeen, Texas. You previously used your entitlement to buy your home in Tennessee. So the county loan limits in Killeen is $726,200. We're going to times that by the VA administration's 25% maximum loan guarantee, and that would be $181,550. But remember, you've previously used $75,000 to buy your home in Tennessee. So we're going to minus that from the $181,550. That means you have a remaining entitlement of $106,550. We're going to times that then by 4, which means you can buy a home up to $426,200 with no down payment. If you decide to buy a home that is more than that, then you would have to come in with the difference of that. And because this is the second time that you are using your VA entitlement, that VA funding fee that can be financed or paid out of pocket is now going to be slightly higher. It's going to be 3.3%. But again, using the maximum purchase price of $426,200, even with the VA funding fee, you would be coming in with 0% down. So here's where it really gets fun with no loan limit example. Let's really dream for a moment. If you get orders to move to Hawaii and you sell your home in Fort Campbell, where you've restored your full entitlement. So the county loan limit in Honolulu is $1,089,300, but you desire to buy a home that is 1.2. Because your full entitlement has been restored, you can go above the county loan limit and put 0% down and max out your full VA entitlement and live hopefully happily ever after on Honolulu. Because there are no VA county loan limits, you can really leverage your VA entitlement to buy the home of your dreams or to add to your investment portfolio as you PCS through your military career. Obviously, we never want you to borrow more than your means that you can be comfortable for. We want you to succeed and have a happy life, a fulfilled life living in a home that you can create financial security and wealth for you and your family. Next week's video is going to be on the timeline of PCSing. What should you be doing 90 days out, less than 90 days out? What are the documentation you need to move forward to close your loan successfully with a qualified loan officer that can offer you your VA loan? And even though we make it sound super easy to get a VA loan, just like any loan out there, there is a qualifying process. We are going to look at your credit. We're going to look at your income. We're going to look at something called debt to income ratio, which means everything you owe divided by everything you make creates a ratio or a percentage, and that usually needs to be within a certain guideline. We run it through the computer system and it will say if you're approved for that particular debt to income ratio. Now, a little pro tip and side note to understand is if you are keeping a home and PCSing to buy another home, to use or offset the mortgage on that home, we will require a rental agreement to confirm that you have a valid renter in there to offset the mortgage payment and keep that debt to income ratio low by using the rents that you receive. I am truly enjoying sharing these videos with you on VA home loans, the process from start to finish, how you can get comfortable with the process, how you can get comfortable with me. I'm here for you, me and PRMG. We can help you in over 49 states. So if you are in the middle of a PCS and you want personal professional care where someone is available to you 7 days a week and you're just not a file on their desk, I'm here to help you because your home needs and dreams are truly my own.